All right, everyone, let's get this interrogation started. I mean, this panel discussion started. So I have a few questions prepared. We may, at the end, have some time to field questions from the audience. We'll see how the discussion goes. It's very easy for panel discussions to get away from us with everybody answering the same question. So I'm going to try and avoid that a little bit by targeting a few people with a few specific questions. But to start, I think the most common conversation that I've been having with investors and participants in the market is that the market is super weird right now. We're in this sort of like suspended space, and nobody really knows what or why or where or So the question is, what is it going to take to change it? And you can, as individuals, you can take that as specifically for gold, you can take that sort of macroeconomics, whichever your bent prefers, but what is going to cause something to change in this weird suspended market that we're in?
Okay.
Go for it, Eric. It's just everything. It's just all everything that you think about condensed into one answer.
I think two things that would help, although the first one's sort of a qualified response. I mean, I've said a few times recently, I think we got to see New York roll over. I think part of the problem with the gold price is there isn't enough. There's no real risk in the market right now, or traders aren't the least bit worried. I think having New York roll over a little, and keep in mind, I'm definitely using the qualifier a little. I'm not saying I want to see a 50% crash, because something like that blows everything out. I'm just saying be shown to have been topped. I think you'd probably bring in a bit more interest on the gold side, because the risk generally would increase the risk perception. And the other thing that I think would help the sector, and I was really a skeptic when it came to this at the start, but I have come around to agreeing with those that say one thing that would help the resource space would be the wheat space really rolling over. Yeah. Wheat and crypto, but really, I mean, crypto is like nothing compared to the wheat space when it comes to how much money it's sucking in. And I think a lot of when you look at the difference between, say, the Canadian junior resource space and the Aussie junior resource space, there's a number of different reasons why it's different, but I do think a big issue is there is no equivalent speculative sector in Australia that's sucking money out of the market the way the wheat space is here. So I mean, I think seeing wheat roll over, which I think it's going to do, it looks very 1999 internet to me right now. I don't think it's going to end well. So I think either or. I mean, I'd rather see it be the wheat space. I don't particularly want to see New York go down 30 or 40%. That wouldn't really be fun for any of us. But no. So maybe the wheat space. Let's just stick to that.
Okay. Greg, what's it going to take to make something change?
It would be nice to see a really big discovery. Something that would be one of those moments like a Hemlo or something. That really would get people to pay attention to our space again. I agree with Eric though too. There's so much speculative money going into pot, Dow stocks. Still people are making money there, even though they look ridiculously overvalued. Again, we saw Q4. It started to roll over. We got excited. Gold price went over 1,300, and boom, the Fed changed gears. They're talking out both sides of their mouth because they're trying to move the market with lip service, and they can't because they're caught between a rock and a hard place. But that shift has to happen. And what the catalyst is, I don't know. I've been tracking like 30 some items of potential black swan events that could cause this change. And we don't know the timing. We don't know which one. It could be something we don't even know about. I sense that we could see something come out of Europe first. That seems to be like a very, volatile area right now in so many ways. And if it was to start there, I think you'd see something very bizarre that's never happened before, where the euro money comes safe haven into gold and the US dollar simultaneously. Very unusual. Usually it would be inverse, but in this case I think you might see both benefit in the short term before eventually the dollar would roll over as well. And that's just my take on it.
John?
Well, Donald Trump and Mike Pence need to both resign, and apparently Nancy Pelosi becomes president, and then it's game on again for the gold bugs. No, but seriously, I think what's holding back the resource sector is this sense that the general equity market in its 10th bull year needs a correction of 25-30% to kind of be a reset. And while that sounds frightening, it's not the same thing as it was in 2008 when you had a whole house of cards related to mortgage securities and that linked to it. It's we're living under this cloud that well, one day this will happen, and then we're going to be crushed even more than we already are. And I think once it's happened, well, we have our correction. It can start grinding higher, and we can start being optimistic about the macroeconomic future, and start thinking about the metal price demand rising, and instead of everything falling apart and becoming much worse than it is right now.
Aren't you all glad you stuck around for this happy discussion? Jordan.
Well, the percentage figures are interesting. I'd actually agree with them because looking at gold, we've had two, in the S&P, we've had two basically 20% corrections in the last 4 years, and those were not enough to get gold to be able to break out above that wall of resistance. But I do, now for stepping back for a second, for the resource sector at large, I think it's not going to outperform until we get into the next economic cycle. That's when the entire sector will be doing well. I mean, of course, individual commodities, things could be different. I mean, I focus on gold and silver, so I'll leave the other commodities to everybody else. But the key for precious metals is a rate cut. It's the Fed changing policy. And I think there's a good chance we get a rate cut in September and we'll get a bounce, a good bounce in precious metals. But the question is it a one-time rate cut? Like, are they going to cut 50 basis points and then do nothing for 6 or 9 months, and then this economic cycle extends? In that scenario, you get another good bounce in precious metals. You don't get the start of a new bull market. However, if they start to cut rates because the S&P rolls over and the economy is heading into another downturn, that's when you get the start of a real bull market in precious metals. And then when we get towards the end of that downturn, that's when commodity sector as a whole, I think, would outperform.
So the common theme here is a look forward to turmoil, broad, like macro turmoil. So that brings me to, I think
John Kaiser's first gentleman.
Yeah, other than Pelosi being president, yes. So then that brings me to, if that's what needs to happen, if that's what quite a few of you are expecting to happen, is some form of economic turmoil, whether starting in Europe or whatnot. What's your portfolio approach right now? So there's always the baby in the bathwater scenario with gold stocks if there's a correction in the broad markets. So do you hold what you have and buy more when things dip? Do you sell everything that you have now? Do you continue to position because opportunities in the exploration space crop up when they do? What's your sort of portfolio approach with this outlook in mind? I'll start at Jordan's end just to, so that Eric doesn't get to steal everyone's thunder every time.
Well, I think what's interesting, and everybody can attest to this, is capital is flowing into companies, juniors that are making discoveries, high margin potential discoveries, and companies that are adding value to those types of discoveries and growing those projects. Money is flowing into those types of companies. So I think you have to look at holdings on a case-by-case basis. You have to look at, realistically, these individual companies, which are the ones that, have potential to have really good news that can influence the market. And then that group of companies then look at the ones where their prices are, the stocks haven't moved a whole lot, so there's limited downside. I also think that looking at the companies that have done well, if we get into a tough period here over the next 2, 3, or 4 months, you can buy really quality things that maybe they haven't corrected in a while and they're going to correct because the market goes lower. So I think number one, I'd say you have to have a lot of cash and be very patient with that, and then assess the companies that you do own, assess them individually and see. Decide which are the ones that really have have limited downside, but have a strong chance to provide good news over the months ahead. And then you want to potentially drop the ones or avoid the ones that, they're not going to have great news or the kind of news that is going to move the market, over the next few months. Then, those companies you can put on the back burner and, reassess at a later point.
That sort of reminds me of Craig Perry in the ISO presentation pointing to NextGen's share price performance in a terrible uranium market. NextGen did really well. So that's sort of the approach that you're describing, that real discovery stories, true standout stories can perform regardless of what's going on elsewhere. John, what's your bigger picture approach given the macro?
Well, I think it was about how we're managing our portfolio with regard to the resource sector, right?
If you are looking ahead to
So
disaster.
the problem we all have who are still here in this room is we have already put as much money as we can into this space. There's no new money coming in to create liquidity. Our spouses have forbidden us from putting any real money into this space, so we're waiting for a liquidity event in the stocks we're already stuck in order to buy something new. And this is when Gwen mentioned how everything's sort of weird in this space, this is kind of the problem we have. We need new capital flows coming in. And if there's a buyout of something, that's great, but are we going to see recycling of that capital coming into the space? If we do see capital recycled, it comes in through these highly structured shells with the money all coming in through private placements and so on. It's not like people are piling into the companies that are exhibiting at this conference where there are shares in other people's hands. So my problem is if there's something, I've gotten rid of most of the dogs that are hopeless. That doesn't leave a huge amount in my portfolio, but I'm quietly redeploying it into longer term, cheap companies where the story isn't going to flame out in the next 6 months because they're going to put the truth machine to it, but where there's some sort of longer term story, because I have no idea when that turning point's going to happen that brings the new money into this space that's needed to make it alive again.
Fair enough.
Yeah, I could talk a quick story. I'll tell about John there. I was in San Francisco a couple years ago, and I called John to see if he wanted to get together for lunch, and he says, yeah, come by my office. He gives me the address. I get in there. I see he's having kind of a stressful call, and I wanted to give him some privacy. And as he gets off the phone, he says, oh, it's just my wife. She's just informed me I need to get a new job.
And that was 2015, so you can imagine how much trouble I'm in now.
So that was quite the lunch we had. That was a tough time, But I guess based on my comments this morning, you got to go to the best of the best of the best. You got to look for the companies that have the support of the majors, so you don't get into a shareholder dilution problem, the difficulty of raising money. I think instead of the broader portfolios we all used to carry over these years, you focus on a lot fewer shares and the top, the best of the best of the best. And we see a lot of these companies at this kind of show at the MIF, which these companies are vetted, and you hear in the talks that they do have a lot of support from the majors. So I would say another concern I have, if we don't get this catalyst, I was hoping it was going to be early this year. It didn't happen. Gold looked like it was threatening after the Q4 debacle with the Dow and everything, with what the Fed was doing. When that didn't happen, it was, instead of sell in May, go away, it was sell in March and go away. And that's why we're in what we're in right now. It's starting to feel 2015-esque, December 2015. That was the worst month I'd ever experienced in the junior mining space in my career. So if we don't get the catalyst this year, does that mean we are going to test the December 2015 lows again? That would be devastating, right? We all hope that doesn't happen. And so I'm hoping that, some of these other catalysts can kick into gear, we get going again, but we'll just have to wait and see. Timing is so hard to predict.
So it's going to be my job to cheer everyone up?
Yes, Eric. What are you doing with your portfolio?
Whoa,
That's
man,
gonna,
did you
it's
do
gonna
that
be
in the
a
wrong order?
foolproof plan.
Okay, well, I'm going to take the question literally. So, I mean, I'm a widower, but I do have a female broker, and she serves much the same purpose, because she was yelling at me the other day about writing too many what she calls take one for the team checks. And I have in fact written a few of those lately, more than I care to think about, but hey, someone's got to do it, and apparently I elect myself to do that. And it's fine, I'm a big boy, I've been doing this a long time, I know what I'm getting into. But you know, outside of the take one for the team checks, I'd probably say I'm focusing on two things. One, as usual, is discovery stories, because I love discovery stories. And I do believe that a good discovery story, you know, nothing's going to overcome a giant crash, but kind of a crappy market, a good discovery story can overcome that. I mean, obviously how well it does is going to be commensurate to the market overall. But, you know, some of the early stage, some of the guys I invited here that are, you know, drill plays or earlier even, some of those are actually trading pretty well, because people are, you know, they're unveiling fairly large mineralized systems and stuff, and they have people's interest. I think good development stories where you're looking at, you know, margin, lowest quartile costs. The tricky part with those is because I do kind of think we might see at least a mild recession start in the U.S. by the end of the year. And because the U.S., because any American will tell you, at the center of the universe, it has this big impact on even things like base metals, where they're really not an important driver, really, but they're an important driver of the market sentiment sense. So some of those things I'd probably be picking away at, but because I think something like that might happen, it's hard to feel any sense of urgency, especially on the base metal developers, because there's some good ones out there, but you know, they may well be cheaper. So I'm talking stink bids and bids, certainly not chasing offers. But those are probably the two areas I'm focused on, plus some of the things in the portfolio that have already done well, where I'm very comfortable. You know, I like the projects, and I'm very comfortable with management, and I know that they've got enough money to kind of keep going for a while. I mean, you know, I've been friends for a long time with the guys behind West Haven, and I'm totally 100% comfortable with them. I'm totally comfortable with the management of Northern Shield. You know, stocks like that, I don't care if I own them. If it's kind of a shitty market and they go down a bit, it's not the end of the world. You know, a great group like the Great Bear guys. I've had an astonishing number of people come up to me in the last 24 hours and ask me how worried I was about Great Bear, which is like 20% off its high. And I'm trying to be a polite guy, and although you know, my usual, I'm like, breathe into a paper bag, for God's sakes. This is the juniors. You're freaking out about 20%? Like, really? What are you doing here? You're in the wrong room.
When we get to 80%,
Yeah,
then,
get to
80%,
80%,
then it's time to worry at 80%.
And then maybe you're a little worried. But 20%, whatever.
Yeah. And a positive, though, Gwen, we should mention is, nobody mentioned the merger activity that's going on. That is a big positive, that is a breath of fresh air, because this latest Newcrest deal, $800 million to buy Red Chris, the Atlantic Gold getting bought out for $290 on top of what happened last fall with Newmont, Randgold, Goldcorp. That is very bullish, good news for us.
The other thing, I don't know how bullish it is, but a lot of the early stage stories I follow where, you know, they're not even that far along, really. I mean, they're light years from even a resource or anything, but they're big system and stuff. I'm surprised at how many large companies are visiting these guys already. Yeah. And it's not, that doesn't mean anything really. I mean, that's what the big companies do. But I think it's an indication of the comments that you've heard from a lot of people at this show about big companies being worried about the pipeline. I mean, those stories are true, because they're sending people out to look at stuff that's really early days, just to make sure they don't miss it if something happens.
So you guys are sort of prefacing my next question, which was to open up the discussion about M&A. So I've been banging on about how the deals of late, the ones that Greg was just outlining, and the mega mergers that we saw at the beginning of this year, to me look very reminiscent of the gold deals that set up the last cycle. So the sector was still really quiet, it was still sideways, the gold price hadn't moved. The deals weren't exciting on paper, they were often no premium mergers, but they created the companies that became the giants of the gold space in the next bull market. So it looks like that's what's happening now. That's great, but then the question for everybody in the audience is, well, how do you position to profit from that? Like, what do you do if you do expect this to be an M&A cycle? What specific advice do you have to take advantage of that?
Well, you have to first survive it, right? So that means if this is prolonged, the shareholder dilution to the average company without support from a major gets very, very ugly very quickly. And if they can't do the work, then you're not going to make money. So again, I go back to look at where the majors are willing to put their money. Those companies usually check all the boxes, right?
Yeah.
I think there's two ways to play it. I've got my own preferred way, but it's more a philosophical question, really. That you either go after optionality plays, which is to say you intentionally look for companies that are doing a shitty job of making money at this gold price or copper price or nickel price or whatever, that are essentially marginal. Obviously, you got to be careful not to pick companies that are literally going to go under before something happens. Companies like that quite often have the biggest percentage returns if and when the commodity in question has a big move. And it's just a math exercise because they're the ones with the most leverage, because they're doing the worst right now. I've never been super comfortable with that kind of play myself. I'm not really an optionality guy. My preference would be to look for the ones doing the best job, either in terms of, say, single mine companies or somebody that's just in development, where they're clearly going to be, the highest margin, lowest quartile sort of cost. I mean, I was mildly shocked at how much they were willing to pay for Atlantic, but I wasn't really shocked that it was Atlantic, because when you look at their cost base, you look at their all-in sustaining cost. If you're a gold miner that wants to improve your bottom line, you don't go and buy a high-cost producer, you buy a low-cost producer. The same reason I get the question all the time about one company I've followed from day one called Silvercrest, which is not a cheap stock.
No.
It has not been a cheap stock all along. It's partially respect for the management team, but it's partially that anybody that looks at that grade knows this is going to be a lowest quartile producer, like it's going to be. And there's a lot of silver companies that are literally on death's door, and someone's probably going to take it out to save themselves, like literally, they'll be the life preserver. So you look for a life preserver type deposit, something where
Right.
anybody buying it, it's going to improve
It's
their
gonna
bottom
help
line.
them.
I don't do optionality, it's not really my thing.
John, do you see more M&A in the future? Do you think companies have the guts, the share strength, the bank accounts, the desire to do more M&A on the bigger companies? Do you think the targets are ready? How do you feel about the deal space?
Well, I think all these optionality plays that were sort of stranded when gold came back from $1,900, the better ones have been gradually absorbed, and what's left isn't really that great. And I was reading the newspapers this morning, and Barrick's apparently going to offer to take over Acacia Mining and its Tanzanian assets at a 20% discount to market. Whoa.
What a generous offer.
That's not, I don't really want to bottom fish these types of M&A targets. I mean, the best takeover that I saw in the last few years was Arizona Mining, which was a 35-cent stock in January 2016, and last year it was like two and a half years later, it was taken out for $2.1 billion at $6.20. And that's a lot of cash going into the system, but I haven't really seen any recycling of that. It reminds me of that period, 1990 to 93, where there were takeover bids like Mount Milligan and Stikine and that, but nothing got recycled into the system. So there's ones like, for example, Midas Gold. That's an obvious one to take over, but at the current metal price, gold price, this thing doesn't deserve to go into production, but at 1,600, it probably does. So, you can buy something like that and hope Barrick does a clean out before gold actually goes up and gets this thing properly priced. But I'm not very keen about trying to predict M&A
Gotcha.
plays.
Jordan, do you have any thoughts to add to this deal space discussion?
I mean, I don't think, a couple of things. I don't think M&A is like a huge catalyst for the sector. And that being said, I don't think we're going to see this huge M&A boom anytime soon. And then the other thing is, trying to buy something because it's going to be taken over is very difficult. Just try and find things that high margin potential in the discovery space, development space, and you have to try and find them before they get to a certain point, because like Atlantic Gold, I mean, that wasn't a cheap stock, and that got acquired, and like maybe Silvercrest will be the next one, and like that's not a cheap stock. So I just kind of have a subdued view of M&A.
I was saying before, when you want your stocks to have multiple ways to win. So you certainly don't want to buy something just because you think it's going to get taken out. You have to buy it because it fundamentally makes sense and it has its own trajectory ahead that makes sense. And then because of those things all work, then it's also potentially attractive to majors who don't have reserves and need more projects in their pipeline. Let's shift over a little bit to outside of gold, and maybe each of you can tackle a different commodity. So I don't want everyone to talk about copper or everyone to talk about uranium, but let's talk a little bit about copper, uranium, zinc, rare earths, if John wants to chime in on that, or whatever, just some of these other commodities. I keep saying that it's really sad, the base metal space, and it's difficult because the fundamentals are so strong. So I don't really know what to do about the base metal space right now, because the fundamentals make sense, but the sentiment isn't there. So does each of you want to sort of choose one of those commodities and talk about what you think is happening, and to sort of go back to that first question, what do you think is going to change it? And are you buying anything right now? I mean, in the zinc space and the copper space, the share prices are so beaten down. I don't know if there is a baby to throw out with the bathwater. Like, it's already gone down the drain. So, well, yeah. So how do you feel? How do you approach the opportunity in those commodities? You can all fight over who gets to talk about copper.
I'll start first. I mean, copper is still copper. It's, even if the economic situation deteriorates, there's still new emerging nations. The poverty-stricken nations are starting to move forward, kind of like the Chinese economic miracle in 2006 really pumped up all the base metal prices. I see some of these other areas starting to have that infrastructure building, and that's a positive for the base metals, particularly copper, I think. John and I had a dinner Thursday night when we got in, and he was mentioning the rare earths, and I agree with him that this whole Trump-China thing could cause a rare earth 2 boom or run again. I just think there's something to that, because when you realize how critical these things are to strategic and technological situations, it could cause big problems. And one that I came across as I was in the uranium space, I'll just mention their name. I'm trying to get them here for the conference in September. It's called Appia Energy, and they've been trading around 12 to 20 cents. It's recently 35 cents. With this news, and they already have the discovery that's right at surface. It's super high grade stuff, and they're going to be drilling it this summer to test the depth, and it really wouldn't take much, 40, 50 meters of mineralization, this would be game on. And so I think that's why the stock is perked up, but that's just one I can mention. John probably has some others that I don't know about, but I agree with John. I think the rare earth could pop.
John, in the rare earth space, one question that I have about whether Chinese saber rattling over holding back on rare earths is possible is, if they do that, don't they hurt important trading partners that they still value, like Japan and Korea, as much as they would hurt the partner that they're trying to hurt, which is the United States? Like, how much can China actually do this holding off on rare earths? Because I think whether they can actually do it or not is going to determine whether this opportunity exists.
Well, the mission that was accomplished in 2010, 2011 was to push manufacturers of components that require rare earths to shift the manufacturing to China, where there wasn't going to be a problem getting the raw material. So the thing that's not really being talked about right now as this trade war heats up is that China isn't a big exporter of rare earths. It uses them domestically. Yes, there's an FOB price and some comes out, and what is coming out is actually being smuggled through Vietnam and some of these other neighboring Chinese nations, and China's busy trying to shut that down. China's within its rights to restrict exports on environmental grounds because like the whole heavy rare earth industry is run by criminals, and they abuse the environment, and one of the byproducts of letting the manipulation get out of control in 2010 was all kinds of illegal production started up, which they are trying to control. So I think we're going to see naturally a shutdown of rare earths flowing out of the country, and then say, well, that's okay, we still make this stuff, and then too bad that guy's putting a 25% tariffs on all your neomagnets for your hybrids that you want to now assemble in the United States rather than somewhere else. But that's not our problem. We're not paying the tariff. It's your consumers who are going to be paying that tariff. What worries me more about the China-USA thing is that this thing can stop being just this pushing, shoving war, but actually acquire a military dimension where if suddenly there's a military reason to be angry with each other, then stuff stops shipping from China. And then we have a serious problem for anything that has rare earths embedded inside it. So I think we'll see rare earth mania to possibly come back simply as insurance policy against this disaster happening. And so you'll see money going back into those juniors which have these deposits. And like Quebec Precious Metals, everybody knows about the Sakami project, but they still have 68% of Kippawa, which was the heavy rare earth one that Toyota did a bunch of work on, and which could end up being revived, put into some other entity, and all of a sudden you have these companies with these rare earth deposits, and it doesn't matter that they're intrinsically worthless at the quoted China price. It's that if this train wreck happens, then all of a sudden we have 5-10 times higher prices. And another important thing is when they jammed the prices up 10-20 times, all the end users were absolutely screwed with the costs of their components. So they did massive substitution where they could, and thrifting elsewhere. And then the prices collapsed back to where they were, so they had a bonus, so their costs for the rare earth functionality was even less afterwards. Yeah. And so if the prices do go up now, the pain caused by having to pay the higher price is less, plus the lesson from thrifting means they'll go and do more. So you have Jevons paradox at work where they start in creating greater efficiencies for using a scarce material. You're going to end up increasing the total demand for it. So this kind of story is emerging, and I think we'll start seeing, there's not many companies that have rare earth projects, but maybe a rare earth exploration boom. This is different from the one in 2010-11 because globalization was still intact, free markets, blah, blah, blah. China had the lock on it. It was going to supply everything. This was going to blow over. What we're dealing with now may not blow over, or may get bad and stay bad for a very long time.
The question has been fair enough hijacked by rare earths, but we could cycle back to where we started, which was to talk about maybe copper and zinc. So I know, Jordan, it's not your area of focus, but you look at things technically and big picture wise. So do you have commentary on how the investor might approach what looks like a fundamental opportunity in base metals, especially in the copper space, from stocks that are beaten down, but where the outlook is very strong, yet we have this overhanging question of whether the markets are going to roll over and what impact that might have?
Well, I have two comments on that. I mean, the first one I think is look again at individual situations and the company and what they're working on, and if it has high margin potential. And I mean, all of you guys can speak to base metals on that much better than I can. I mean, I think given how the markets, that just the junior market's performing, where capital is flowing into those specific areas, I don't think I mean, if it's a good enough discovery, I don't think I mean, if it's zinc or if it's copper, I still think I think it depends more on the discovery and the project and the commodity in that respect. I think the big macro picture is interesting because I see two ways where it could play out. And the first way is if, we get like a 50-point time Fed cut coming up before the end of the year, and if that is able to extend the cycle, if that can successfully extend the cycle for like, 18 months or 2 years, that would, I think, be more bullish for base metals relative to everything else. However, if we get the scenario where they do a cut and then it looks like they have to cut again, within
Yeah.
3 or 6 months, then the reason they would have to cut again would be because things are rolling over. Then gold is where you want to be, and then base metals is where that's what you would want to avoid. And but a time will come for that anyway. I think regardless, when we get to the next cycle and that gets underway, I think that'll be a very good one for base metals.
So it's really a question of how much people question growth, how strong the questions are around growth. Eric, you haven't chimed in yet. He always laughs.
Yes. These comments are, you can fit these comments, copper, zinc, nickel, all they kind of fit all three of those markets. They're kind of the same. All of those metals, particularly zinc, we've seen some new production come on. As it turns out, the warehouse inventories have not grown to the extent I think even the zinc guys thought they were going to. I think everybody's a little surprised they haven't gone up more, honestly. I think that partially speaks to maybe some production issues, which you just always seem to have with new mines, especially base metal mines. It seems like things never go as smooth as they're supposed to. Production never ramps as fast as it's supposed to. The same is sort of true in the copper space. Nickel, there simply hasn't been any new production because the nickel price sucks so much that nobody can really, you can't really make sense of almost any of the hard rock nickel mines in the world. But you basically get the same situation in all three of those metals where you've seen warehouse inventories drawn down significantly. There are, it has to be said, off warehouse inventories of all of these metals and everything else for that matter. Nobody really knows how big they are because they are off warehouse. They're not bonded inventories. They're just, this company or that supplier, that user has the stuff in a warehouse somewhere literally. We know in the case of nickel, I was always suspicious those inventories were higher than people thought, and it turns out they probably are because the nickel, if you look at how undersupplied the nickel market appears to be on paper, those inventories have taken an awful long time to come down, so there's obviously stuff coming from somewhere. I think a lot of it's the pig nickel, as it's called, which is these kind of cheap laterite, saprolite producers in places like the Philippines and Indonesia. They ship the stuff to China. They smelt it in a blast furnace and produce this kind of 12-14% nickel iron concentrate, which is useless for a lot of things, but it works just for the steel industry, which is where most of it goes. I have no idea how much of that stuff's sitting around, but I think in most cases, all three of those metals, they're at the point now where if, as Jordan mentioned, things turned around where everybody's going, yeah, there's another 3 years in this economic cycle, I think you'd see all three of those, particularly copper, just because it's the one that's traded the most, probably then zinc, maybe nickel, they would all go up, I would think, 30 or 40 or 50% a pound. There's no reason why that shouldn't happen. The one thing, as I noted earlier, if you think we're going to have a pullback, and China is far and away the most important demand area, followed probably by Europe. I would say the U.S. is third, if that. So those two other trading blocks are the ones you really need to watch. If you look back at 2007, 2008, if you get yourself a longer term chart for really any of those three metals, what you'll see is you get to 2000 2008, the whole thing shifts down. And that's basically what happens if you get a big recession. The trend is still going the right way, but it all shifts down, which means it takes a couple of years to get back to that basis again. But I think if you're someone who's willing to close your eyes and not worry about it, they're all going to be fine in 2 years or 3 years or 4 years. I just don't know if there's going to be a dip in the middle. I'm not concerned about any of them. Longer term, the supply-demand picture looks fantastic for all three of them, really.
Yeah.
It's just, we got to, whatever you're investing in has to survive long enough to benefit from it.
All right. We're at the point now where we have to talk actual companies. So I'll structure the question quite specifically, which is, if you had to, on Monday, go and buy one stock that's exhibiting at the conference here right now, what stock would it be and why would you buy it? I'll give you 5 seconds to come up with your answer. Thinking. John, you look like you're ready to go.
Yeah, I would go for Zephyr Minerals, which has the gold as a fallback story, but is now going to take a shot at a big monster, a Broken Hill style system in Colorado. And in a year, we'll know whether or not that worked out. And at the current pricing, If it didn't work out, the stock will still be here. On the other hand, if it did, it'll be substantially higher.
Well, I mean, since we focus on exploration, I would say Triumph Gold, because the stock is cheap and I think they've just started what's going to be a very important drill program this summer. And so, I mean, you have to love the risk reward, because if they hit, the stock is going to perform really, really well. If they don't hit and results are kind of okay, I don't think you're going to get hurt that badly given where the stock is trading. So I would look at those situations and exploration right now. You know, which are the companies that are cheap yet at the same time they have cash and they're going to be doing the work this summer that can produce a potential result that could really move the share price.
Yeah, they're taking a swing for it.
At this conference, I would have to say the story that I liked the most this time around was Quebec Precious Metals. You know, already a big major putting money into it. They already have 1.5 million ounces of resource. They're trying to get to 2 million. They're well on their way. It's advanced stage. It looks like they're going to get there. At 2 million, they're going to get bought out, in my view. So safe, you know, good tight share structure, top management, great location, great infrastructure, checking all the boxes. A company not at the conference, Great Bear. I have to stick with Great Bear.
Oh, he's sticking with Great Bear.
Very soon, very soon, too.
Yes, Eric's very happy to hear that.
Yes. I'm going to pick two because that's just how I roll, and just because I like knowing.
You ask Eric to pick
Yep.
one, he always picks two.
Yeah, I keep telling them I'm not going to do the pick one thing, and they don't listen, and so I ignore their instructions, and I'll come back with at least two, if not seven, just to be annoying. But I'll stick to two this time. One's gold, silver, whatever. The other one's base metal, essentially. So they're both, essentially the same level of development. One of them, they're both companies I invited here. One's Northern Shields. I really like that new property they picked up 3 or 4 days ago. Another low sulfidation epithermal, but with some very high grade at surface. But it's brand new, really. Almost all the showings on it were discovered by the prospector they bought it from. And I like new stories. Shot Rock in Nova Scotia is also a new story. That thing is getting very big, very fast in terms of mineralized system. How big are the ultimate gold zones with the right grades that are there? Who the hell knows? It's too early for that, but I really like how big the system is overall. I'm very, very comfortable with the people running it. Whatever they raise goes into the ground. Those guys will have to raise money, but I'm not concerned about that at all because I know people are trying to give them money. The other one is one that you can happily buy for much less than I paid for it. It's another company I invited here called Pan Global. They ran into a couple of issues. There's two things I really started buying that and recommending it for. One is an IOCG target, iron oxide copper gold. As it happens, the guy running it was one of the high-level guys at RTZ. He actually has a lot of IOCG experience, which not that many people do. And this is kind of this area is his discovery. He's the one that realized it had that potential. But the best part of the target, at the last minute, one of the landowners who'd been fine up to then, they'd done IP, they'd done soils, they'd done all that stuff. Pretty much on the eve of drilling it earlier this year, she kind of went sideways and decided she'd want to give them access. But she's come around again now. She's fine. They've signed the access agreement. So I don't think they'll drill it like tomorrow, but they have access to what I consider by far the best part of the IOCG target. The other thing that I think we'll see a drill announcement on like very soon, and I know in this case they do, the permits and everything are done. That's basically the two, they've got two concessions close to each other in the Iberian Pyrite Belt. The Iberian Pyrite Belt is one of the most important mineral belts in the world. It doesn't get a lot of retail play. There's very few North American companies there anymore. But if you look at some of the world's biggest deposits, biggest base metal deposits, a lot of them are in that belt. RTZ, which is the second biggest miner in the world, it's called RTZ because it was originally Rio Tinto zinc. Rio Tinto is part of the Iberian Pyrite Belt. It's a great place to look. These guys have two. One of them, I think, has a couple of drill holes. The other's never been drilled. Big gravity anomalies. All of the deposits that have been found in the Pyrite Belt were found by drilling gravity anomalies. That doesn't mean these two gravity anomalies will be deposits, but if you're looking for a straight up drill spec shot, and because of the problems they had with access and with other stuff earlier in the year, they went from being a 30-cent stock to a 7 or 8 cent stock. So like I said, you're buying it way cheaper than me. I think it's a good shot as just a straight up roll the dice drill spec.
I'll chime in as well. Greg stole the one that I was going to say first, which is Quebec Precious Metals. I just think the strength of that story is right there, and I don't think the market is very aware of it yet. And the resource that's going to come out, I think, will be quite pleasing to the market when they realize what's going on there. The other one that I think I would mention as just at a great price to position in is EMX. I don't think that a company should get penalized for making $90 million, but that is what's happened. So the enterprise value is down. What are you doing making all that money? So the enterprise value is down, and I think that this team is going to pull out some interesting deals, and I think the market will react to those when they happen. Right now, they're discounting their ability to make deals, which is weird. Track record suggests otherwise. So I think that given the enterprise value right now, EMX is on my list. And with that, I think we're going to wrap it up. It's been a very packed 2 days, and Matt is, of course, now coming with the most important part of the Metals Investor Forum, which is the raffle, she says very facetiously. And I will get these lovely gentlemen here at the table.